ARM, the company that NVIDIA once tried to buy outright, reported quarterly financial results for its quarter that ended September 30th, 2024. In this video, I'm going to review the big picture items from that financial update, the big takeaways that investors need to know about ARM, and update my buy recommendation of ARM stock. I had the stock rated as a hold. I told investors it was too expensive to buy. That's been my conclusion all year in 2024. The stock has been expensive throughout, and I've updated several times here and came to the same conclusion. Is it going to be different here? Let's find out. Let's take a look at the company's latest results, and let's see if they warrant an upgrade in ARM stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Right, so ARM telling shareholders that over the past 12 months, there's been an increasing adoption of ARM technology, and that's driven strong licensing revenue growth. So if you didn't already know, ARM Technologies runs an extreme asset-light business model. It outsources, it licenses its technology, and it doesn't deal with the manufacturing of its technology at all. And so it generates licensing revenue and royalty revenue, which is lucrative. It's asset light. It doesn't need to invest in the manufacturing and all of those capital expenditures that are connected to manufacturing, etc. And so that's been one reason why investors have been excited about ARM technology stock, along with how effective its technology has been, and the companies that are adopting its technology, including NVIDIA, which we'll see a little bit later in the video. So demand for AI everywhere is increasing the need for more computing power, and in turn driving their partners to make long-term commitments to more and more powerful, energy-efficient ARM technology. Additionally, demand for its compute subsystems has been higher than expected and is also contributing to licensing growth. So the company's been one of the prime beneficiaries of the rising demand for artificial intelligence, and that's another reason why investors have been excited about ARM stock. Now, as I highlighted, I have not rated ARM as a buy. I had it rated as a hold, and the last time I updated it was on July 31st, reiterating my hold recommendation. I've had it here all year long in 2024. The primary reason why I didn't rate it as a buy, even though I've liked the business, I like the business model, I like the industry, so many things I like about ARM, the valuation has been prohibitive as a buy for ARM. So let's see if that changes here after these results. So ARM also saying that this has translated to a financial outlook that is significantly better than what we expected a year ago. In the second quarter, we exceeded the high end of our guidance range for both revenue and non-GAAP earnings per share. And you can say that for ARM, I've been following this company since it went public, and for almost every single quarter, correct me if I'm wrong, they've beat expectations. They've told investors revenue and earnings per share, this is what we're expecting, and they've exceeded it almost every single quarter. They've been a publicly traded company, so this is becoming a habit now, and this is something that investors can come to expect from ARM, since they've done it so many times where they give you a forecast and then they beat their own forecasts. Kind of like the opposite of Tesla, right? Tesla gives investors forecasts and then habitually misses those forecasts. ARM is the opposite of that. And so if you're an investor evaluating business and management, you have to incorporate that, right? What is this management team in the habit of doing? Okay, ARM is in the habit of beating expectations, something you need to keep in mind when you're looking at the company. They go on to say that AI-enabled devices need significantly increased compute performance, yet also require energy efficiency and rapid time to market. ARM's platforms enable more complex AI chips developed on faster cadences across smartphones, cloud servers, on edge, Internet of Things devices, automotive, and networking devices. And this has been true across the board. I heard very similar talk from Taiwan Semiconductor, from ASML, from Qualcomm, and others about the increasing, and Micron Technology as well has been saying a similar thing about the need for more computing power outside of the data center, right? Right now, the data center optimized for AI, spending from Amazon, Alphabet, Microsoft, Meta platforms, that's been booming, no question about it. The category we've seen incrementally increasing are all those other devices, the edge devices, the laptops, the desktops, the smartphones, etc. Those haven't seen the kind of increase that we've seen in data centers optimized for AI. But these companies that operate in that industry, including ARM, have been talking about and forecasting that this is happening. This is going to happen. And we're in the beginning stages of that. So that's a trend I've been following. And this is yet another reiteration that this is going to increase the computing needs for those devices. So ARM offers huge improvements here. For instance, their CSS for clients include a 36% improvement in peak performance and 59% improvement in AI inferencing relative to prior platforms. And these improvements are driving higher royalty rates and revenue per chip. So that's in part helping ARM increase their technology, including the latest iPhone 16, which helped royalty revenue from smartphone application processors grow strongly year over year in Q2. And we got a small snippet of a data point for iPhone sales from Apple when they reported their quarterly results. Apple CEO Tim Cook saying that the little data they had from iPhone sales, because it only recently launched, was looking very strong, better than last year. So early days for this latest model of iPhone, but already we're seeing positive adoption from consumers. Right? So this more on-device processing allows faster user experience, significantly enhanced user privacy, and less energy-intensive interaction with the cloud. And so this is going to be a positive virtuous cycle. As this enhances the user experience, users will want more of these devices, and then that's going to enhance the user experience even more, and it's going to feed on itself until this technology reaches levels where they can't improve on the performance that much more. But there's a long runway to go for that. Also, ARM operates in the ADAS market, which is driverless car technology, right? They are in that market. And one of the options for investors that think that is going to increase, ARM offers their power in those devices. Now, I mentioned that another proof point is their data center momentum is NVIDIA, right? I mentioned that NVIDIA uses ARM technology. And its latest technology, the pending shipments of its Grace Blackwell superchips, integrate NVIDIA's high-performance accelerators with energy-efficient ARM-based CPUs. So one of the leaders in this category utilizing ARM-based CPUs in their Grace Blackwell superchips. Overall, revenue increased by 5%, which was mediocre for a company that's expected to grow at roughly 20% per year annually over the next several years. But thankfully, annual contract value grew 13% year over year to $1.25 billion. And the company's RPO, remaining performance obligations, increased by 10% quarter over quarter to $2.4 billion. So they have a strong backlog that's several years worth of revenue for the company. They have a pristine balance sheet, but looking ahead, they're forecasting revenue of $950 million at the midpoint, which would be a solid improvement from the previous quarter, and earnings per share of 34 cents at the midpoint. Again, like I highlighted in the previous quarter, they forecasted $800 million in revenue and delivered $844 million. They forecasted 25% in EPS and delivered 30 cents in EPS. So these forecasts for the upcoming quarter, investors can be reasonably confident that they will exceed those expectations. Now, ARM stock is trading at $142 per share, And at this price, it's trading at a forward price to earnings of 68.9, which in my opinion is still prohibitively expensive for this stock. I would like this stock in a forward PE range that's a little bit more accessible, perhaps in the low 50s or high 40s. I would prefer to pay for this stock, all else being equal. So to update my recommendation, no, I don't think these results warrant an upgrade. So I'm reiterating my hold recommendation for ARM stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.